Hi, everyone, and welcome to the next episode of the Crypto Standard podcast with me, Jim.
I'm EJ.
Jordan. I don't know why you went to Mexico for a bit of sunshine. Dundee, it's like unseasonably warm here right now.
But what's the temperature like? That's the real
Well,
question.
it was about 15 degrees today, and so that's what 15 double it at 32, about
you're in
67 Fahrenheit. It was lovely.
you're in double digits now. This is you're moving up.
Oh dear. And obviously you'll be a bit more perkier now. You'll have cheered up out your little grump because Bitcoin's on a wee roll. Bitcoin's up a few $1,000s, isn't it?
Yes, I am a little happier now that you know what, like it's just been down in the dumps and we've been looking and talking about the adoption, and now we're seeing them kind of come together a little bit. And the amount of, you know what, like when I look at El Salvador now, I'm just like, so much is going on there. I need to get there ASAP.
Yeah, it's interesting. So today's guest, I'm just about to introduce him, is that I think he's going to give us a real strong perspective on what's happening in terms of United States, Bitcoin, funds, big business, what's really going on in the politics of it all. So I'm excited, and Andy lives in somewhere really cool. James, tell us all about yourself.
Well, it's good to meet both of you. I appreciate you having me on and on this beautiful Friday here in Las Vegas. And no, it's great to meet both of you. I appreciate it. So I call myself a reformed hedge fund manager. And what I mean by that is I had a hedge fund a number of years ago, and I've helped and been involved as a COO and one of the investment officers of a hedge fund. So, but reformed in that I understand how the fiat policies and monetary policies, particularly of the United States, driving and the Western world driving inflation and what is going on with the separation of wealth in this world, and I understand it. And so I recently found Bitcoin in the last about just over a year ago, and I dove head first into the rabbit hole, deep into the rabbit hole. You both have conversed with me quite a bit on Twitter, so you know exactly where I am now. But and so my mission is to help spread the word and help people understand the asset itself and why it separates itself from every other asset in the world. And so yeah, I'm excited to help share that knowledge and from the institutional world. So I think it's the kind of information that most people don't get. They're just not exposed to the institutional investment world and understanding exactly what's going on there. So
yeah,
It seems
I
to.
think.
Sorry, Jordan. Fire away, young man.
I was just gonna say we will talk about your newsletter in a minute, but just because I've read it and I love it. But
awesome.
What we ask every guest that comes on is, how did you get into Bitcoin? You said you got in a year ago. Did you have that aha moment, or you just realized everything clicks and you're like, wow, like
yeah,
I
did.
realized.
I had a couple aha moments. First was the the typical way that a traditional investor looks at Bitcoin. And so this is back in 2018 when Bitcoin had just plummeted in price from the 20s down into 4,000.
Remember that well.
And and so I had some discretionary capital to invest, and I thought, I want to do something that's a little bit further out in the risk curve, and I want to investigate something that that might have a little bit more upside or a lot more upside than my traditional investment profile, because as you guys know, I've been in private equity and a little bit of venture capital, and I've been in arbitrage and in hedge funds forever. And so I found Bitcoin, I thought, and I'd been hearing about it, and of course it was in the mainstream media, and it was all everybody's talking about how it crashed and how all the attention was on Bitcoin at that moment. And so I did what every traditional investment professional would do, and I turned and talked to the technology analysts in the street, the institutional technology analysts, and those knowledgeable about technology, because Bitcoin technology, and was immediately warded off as it's a Ponzi scheme, it's a fraud, there's nothing to it, there's nothing backing it. And that was by and far the absolute attitude across the street. It was like a lottery ticket, but not worth putting anything more than just a pittance in. So I ignored it, I wrote it off, and to this day, it is the worst financial decision I've ever made. I just didn't understand it, and I asked the wrong people. So flash forward, we go into lockdown, and my son, who he's in college, and he's up at Cornell, and he's got a bunch of friends up there who he had been talking to about crypto, and he had really started digging in with these guys. They had some downtime at being remote classes, and so they had dug into some of the crypto stuff. And he's like, Dad, you've got a little bit of extra time here. You've got to start looking back into the crypto and give it another chance. And I said, okay. So, and he was like they are, the young kids are, that he was going after some of the high flyers, and he had made a little bit of money in Ethereum and Solana and Cardano. And he was like, check these out. So I bought a little bit of Ethereum, and I started researching it, and quickly realized that I've got to get my money out of Ethereum and into Bitcoin.
So hold on there, James. Let me just take you back. So in America, am I kind of right in saying that with your IRAs or your 401ks or whatever they are, that people invest, and it's usually like a 60-40 split. It's always been this 60% equity, 40% bonds. Don't worry, we'll get you between 5 and 12% a year, and everything will tick on. And was that your kind of world before you discovered kind of Bitcoin?
That's a good question. So no, that's not my world. I do know that world, and I've been exposed to it forever. That is the traditional large pension fund world. That is the very large endowments, like, who have tens of or hundreds of billions of dollars that they have to manage over the course of many years in order to realize a rate of return that they can return back to their pensions or their employers, whatever those liabilities are. It made sense back in the 80s, back in the 90s, when we actually had some interest rates. Now, I do come from a world that's interest rate sensitive. So I come from an arbitrage world. What I did was, and we didn't go through my story really at all, but really quickly, I was a hockey player in college. I was on the U.S. national team. I was drafted by the Boston Bruins. I was training. I was one of two players. Brian Smolinski and I were were quoted by the general manager of the Bruins at the time that we were the two players he was going to sign. I was headed toward professional hockey, probably in the minor leagues for a little while, whatever it was, but that was the route I was headed for. And my senior year, we're playing against a Northern New York team, St. Lawrence, just under Canada, just below Canada. And I get hit from the side, just a funny hit. My skate got caught in a groove and snapped my ACL and my medial collateral ligaments. Just blew out my knee, and it was over. I mean, it was just the worst timing in the world. It was awful timing. So that was it. So I didn't know what I was going to do. And being at Yale, I had a lot of contacts of other hockey players who had already retired, and they were naturally on Wall Street. And so I found there were a lot of hockey players in the trading and investment world. And so I got pulled into that world rather quickly. I had to pay some bills. You know, I had college loans, I had credit card debt. I thought I was going to be signing a pro hockey contract, so I wasn't worried about it at the time, but that became an issue. So I went straight to Wall Street and was hired by a British investment bank, SG Warburg, to trade something called ADR arbitrage on the floor of the New York Stock Exchange. So I was down on the floor. If you've ever seen the movie Wall Street, where they're running around the exchange, the papers everywhere, that I was in one of those booths helping trade arbitrage, which is ADRs are American depository receipts. So if you have a foreign company like Hanson or Vodafone that somebody in Europe wants to trade American shares in that, or somebody in America wants to own American shares of that, we would put those in a basket, translate them on the floor of the New York Stock Exchange and sell them to them there. So it was a cross-border kind of arbitrage. Okay, why does that matter? Well, it enabled me to get hired pretty quickly by a hedge fund for something that was pretty similar. It's called merger arbitrage or risk arbitrage, where you arbitrage the difference between a share price of a company that's being bought out by another company, being merged into another company. And there's an arbitrage between where that share price is trading now and where it will trade when that deal closes. And Jordan, if you've been reading my newsletter, I wrote something about that a number of weeks ago. Anyways, why does that matter? Well, because those spreads are based upon the risk that you're taking on versus a riskless instrument. Now, back then, the riskless instrument would be US Treasuries. So you're looking at the Fed funds rate or LIBOR, and you're adding a spread to that to account for the risk of that deal closing. So everything was based on interest rates. So the difference between, and that's why you guys will hear me banter with Greg Foss quite a bit about this, the difference between bond traders and equity traders they get caught up in valuations that may or may not have to do with anything that is interest rate sensitive, but they sometimes forget the fact that everything is based off of interest rates. So every single thing in the financial world is based off of interest rates. So I get that. I understand that. And so this is a long way of saying that going all the way back forward to now, you're asking about the United States and where we are and where we think we are in that 60-40 split. Well, there is no interest rate on bonds anymore. There hasn't been for years. So that model is completely shattered. There's no way that you can expect to make enough money on your portfolio with a 60-40 split in order to overcome what we now see is perpetual inflation. And so with that inflation, you're actually getting a negative rate. So if you're getting a 2 or 3% return on a 30-year bond, well, the real rate at this point is probably minus 4%. Wow. And that's with the number maybe 5%. And that's with the number that they're admitting to. It's probably closer to minus 10% or even worse, 12%. So it doesn't really work. And so investment managers are scrambling. They don't know where to put money right now. It's very difficult to have capital and not know where to put it. It's probably the worst time I can think of to be an investment manager on Wall Street, because there's just nowhere to find alpha at this moment. It's very difficult.
So then you go down the rabbit hole after your son talks to you about it, and you start to learn in just at the beginning of the pandemic, 2020. What happens then?
So the second time around, I ignored the traditional investment world, and I thought, okay, I'm going to dig into this myself. I'm going to find some people who are very knowledgeable about it, and I started reading a little bit more just on blogs. I was on Medium. I found some Substacks, and then I listened to a few interviews on YouTube, and of course, up popped Michael Saylor, and man, the guy is so knowledgeable. It's a little overwhelming for somebody who's just digging in sometimes, because you're like, Bitcoin is energy, and it's hard to wrap your head around. And so I was listening to that, and I stumbled upon a video of an interview with Pomp and with Jeff Booth. And Jeff Booth was talking about his, he was going through the dynamics of his book, The Price of Tomorrow, and that barbell of the deflationary pressures of the technology that's being created versus the inflationary pressures of the monetary system, and how those two aspects are clashing, how it's creating this problem for the central bankers that they're not going to overcome. And at the end of that book, and what I loved about Jeff is that at the end of that book, he talks about how Bitcoin is the solution. And it's kind of like it wraps it all up with a bow. And that was my aha moment of, okay, I get it now. I really get why this is a separate asset class that is like unlike anything else.
So you get it. Matt, here's my question. So Jordan and I know Jeff Booth, Greg Foss, Pomp, and sometimes we hope we're not living in a bubble. When you had the aha moment, and you had your traditional TradFi head, you came into Bitcoin. Are you working in a silo? Are you a hedge? Are you the only hedge fund manager, ex-hedge fund manager that gets this and works in a silo, or have you got others in your group?
Nice.
No, that's a good question. The answer is, funny enough, I've had a number of colleagues over the years who have, okay, so step forward. My next step of research was finding more people who understood it. And I quickly found out that Bitcoin Twitter was a wealth of information. And there's so many intelligent people, super intelligent people that I have found on there. But I quickly got on there and started talking to people and interacting with them. I got pulled up onto some stages as an institutional investor and talking about the dynamics there, and quickly gathered a little bit of a following that helped me branch out and reach out and find people. A couple of my I've had a lot of threads that have just taken off because of just I guess that unique knowledge base, right? And I've had a few of my old colleagues reach out and say, hey, you're into Bitcoin too. Tell me about, what you found, and have circled back with them. And now I'm talking about different businesses or different opportunities, or, just the institutional world and that mindset and how it is changing. But I know where this is going. And your next question is, what the hell is taking so long? Why are the institutions not there?
And just to pick up on that, because Jordan and I have been through this whole journey as well, because I used to listen to Michael Saylor on the pod. I listened to a guy called Raoul Pal, and Raoul was always talking about there's this wall of money, this wall of institutional money, and he's been talking about it for like 18 months. And my question to you is, and just exactly as you said, is it about to hit, or is it, or has it hit?
Okay, I would say let's step back. Okay, so first let's talk about what it takes for an institutional investor to even invest in this. So we're not talking about hedge funds. Hedge funds, they're a different animal. Their structure is limited partnerships, and if they have in their investment mandate that they usually have a pretty blanket open mandate where they can invest in anything. And I mean, I've seen hedge funds who invest in the craziest strategies just because they're allowed to, as they're regulated, but their individual investments are not as tightly regulated as they are with the large pension and pension funds and endowments and really large institutions. Okay. So the first thing is that the portfolio manager of a pension fund, okay, he's got to get comfortable with it. And that's going to take a minute. But let's just pretend that person is comfortable with it. They've been orange pilled. They understand how it's a new asset class. They get it. They want to invest in it, right? Now they know that their choice is to either invest in a trust or invest in an ETF futures contract, or they can buy Bitcoin outright. Now, clearly, if they're, they know that the best option there is Bitcoin itself. So buying Bitcoin itself. So that's what they want to do. The first thing they have to do is get it cleared by their investment officer, the chief investment officer, right? So whoever that is, that he's got to clear it then. Then they've got to go to the investment committee. So they sit on a board and they present this new asset class and say, we want to invest in this. And they've got to get buy-in from that whole committee. So that could take weeks, it could take months, depending on their schedules and depending on how often they're having those meetings. Okay, and what their cash availability is, and what the risk return is, and there's always an offsetting risk to doing something, right? So, but if they do get that investment committee to buy in, the next thing they have to do is get the compliance officer to buy in, or the compliance committee to buy in. Okay, so then they've got their structure around the compliance. Well, the compliance committee is going to dig in and ask certain questions that they have to solve. So where do you trade it? And are they a worthy trading platform? And can it be settled properly? And then where do you settle it? Do you settle it at your prime broker? Because these guys use huge brokers like Goldman Sachs, JP Morgan, Bank of America. These are massive brokerages that have a special unit that's called prime broker for large institutions. So that's literally their brokerage house. Okay, they're supposed to house this. Well, if they house it, are they going to hold it? Are they going to hold it in cold storage? Or are they going to find cold storage for them and set up cold storage separately for that institution that they manage? And then who's going to oversee that? So somebody in their office has to oversee it. Then where do they mark it? I mean, because it doesn't mark to market at the close of New York Stock Exchange. Yeah. It's always trading. Do they close it at 4? Do they close it on the London Stock Exchange? Do they take the midnight price? Where do they mark it every day? And then what are the leverage dynamics around that? Can they borrow against it? Is it just a cash investment that they can't leverage against? Like where does that fit in? So once they solve all those questions, then they can start buying. Yeah. And that takes, it could take 6 months, 9 months, 12 months. It could take so long. So even if you have orange pilled a lot of those investors, a lot of those people in that line along the way, it takes that much time. And
do you think then, and I'll let Jordan come in after this, do you think, James, that when Raoul Pal, and he explained exactly what you explained there, all the hurdles they've got to jump through, about a year ago, started to say that he was having conversations with big players. So when you see Fidelity, BlackRock, and Bridgewater Associates all coming out now with crypto desks or potential crypto offerings, right? Do you think they jumped on board with the Michael Saylor playbook 12 months ago, and this is taking them a amount of time?
Well, I think what you're hearing is that's investor driven, right? So their clients, they're on the pulse of their clients. Their clients are saying, we want to have exposure to this new asset class. They have enough clients are saying that we believe this is the future. Okay, so some of them are probably doing it reluctantly, like a JP Morgan. They don't want to do this, but they're doing it reluctantly, right? They're only offering it to the high net worth clients because they're the ones who are pushing for it. They're the ones who have the power to push for it. Okay. So that's a great question. I think where we are now, though, is that Bitcoin is still lumped in with all the other cryptocurrencies as far as investors are concerned, by and large. Not all of them, but by and large, widespread belief is that Bitcoin is one of the cryptos. So you still have people saying, which Bitcoin should I buy? Ethereum, Bitcoin Cash, like what? So there's some confusion still. And so the first thing we need is for the investors to understand Bitcoin, to just truly understand why it is a separate asset class. That's taking longer than we expected. So even though they've been crawling in, it's all lumped in together still. And it's taking them a minute to understand why it's different. Now, the recent events have been very powerful, in Canada and the Ukraine in particular, and not just the Ukrainian people, now with the Russian people using crypto, using Bitcoin in particular, as a way to move money without needing a traditional bank that may not even be open, may not have been open for a month now. So that's an important thing. But the problem is that it's all still seen as a risk on asset class. And it will continue to be seen as a risk on asset class, I think, until we have enough capital in the asset, Bitcoin in particular, to dampen volatility. Now, is that going to be over $100,000? Probably. And that's kind of a mental, hurdle for people. But once it gets over $100,000 and it stabilizes there with enough money, and we're talking about that's well over $1 trillion in the asset class now, right? So once it gets over that, well, then you've got the investors, these institutional investors that have everything set up. They've got it all set up that they can now, they've got the buy-in from their investment manager, from their committee, from their compliance officer. They've got their back office set up. They've got the settlement set up. They can do it. They're all ready to do it. And suddenly the price takes off. And there's this FOMO that's going to happen. Now, when you talk about the wall of money, I think that's when that fear of missing out, kicks in, and this wall of money comes, because it's not that institutional investors aren't price sensitive. It's just that if they have a 1% allocation that they need to make on $1 billion, well, they've got to take that $10 million and get it to work immediately. And that's just what it is. And there's just no question about it. And then they'll step back, and when they need to make another allocation, they'll buy more. And they may average in over the course of a day or two or whatever, but they're not looking at it and saying, well, it's 106. I'm going to wait till it drops to 102. They don't care about that. Yeah. So that's where when you have the wall of money, I think that's where it's going to kick in. That's my personal opinion anyways.
I want to know your opinion on this as well, because we talk about it quite a lot. And that is the spot ETF in America. Yeah. How big an impact do you think this will actually have when one does get approved eventually?
Yeah, I think it's gonna be huge, because every single thing that I just laid out, they can get past. Because as an ETF, you have this immediate New York Stock Exchange, SEC validation that this is an instrument that can be trusted. Now, the difference is, though, you're still going to have people buying it as a risk on asset if it's an ETF. So let's say we get an ETF approved this year. There's just still not enough widespread knowledge and understanding of Bitcoin as an asset in and of itself for that to be seen as a risk off investment, right? But because it eliminates all of those steps that we just talked about, I think it's a great way for RIAs who don't have the system set up, who can't take custody, who it would be very difficult for them to create custody for their customers. It's a really easy way for them to do this, So that's a simple way for them to get a ton of money in that way. And then the second one is the pension funds and the endowments that we just spoke of. But I want to make it clear, I don't think that an ETF is the best way for an individual to buy Bitcoin. That is not the best way to do it. Buy it yourself, take it off exchange, put it in a cold storage, learn how to do it. It's not that difficult. It's a little nervy at first, but once you do it, so I do think it's going to be important, though.
And so if you could probably see, and you could probably feel, James, that Bitcoin in particular is probably on some pathway. It might not be a straightforward pathway, but it's on a pathway, and the price will rise and the adoption will rise. But here's the flip side to that comes out of America a lot. And you've either got senators and governors and mayors who are pro Bitcoin, or they're anti Bitcoin. So you've got Senator Warren, who seems to just anti Bitcoin, and
she's anti anything business related.
Yeah. And then you've got Senator Lumens in Wyoming, and you've got Ted Cruz down in Texas, you'd probably be aware of, who are saying, let's embrace this, let's look at it, let's not overregulate it. You've got the White House that came out with the executive order, which essentially said, let's just explore this and form an opinion on it, but not do too much right away. But then you've got senators bipartisan senators who are coming out and saying, we don't like what El Salvador's doing, so we're going to create a bill in America. It's none of their business. But so my question is, where as business and pensions and hedge funds, etc., start to pick up on this and perhaps make allocations in the next 18 months, how's that sitting alongside with the lobbying of politicians?
Yeah, it's a good question. And I think that what pension funds and institutional money managers want is just they want clarification on regulation. That's it. I don't see Bitcoin. I just can't get to a path where Bitcoin is where it's banned in America. I just can't get there. There's just too much. There's way too much money, large money that's already invested in this, and too many powerful people. So that being said, once we get some clarification, because we have like 6 different acronyms in DC that are trying to wrestle control over it, but once we get some clarification on what the tax strategy, what the tax status is, is it cash, is it an asset, do you get taxed on unrealized gains, or which is just ludicrous, or how is that going to, and what's the tax structure going to be? Is it capital gains? Is it income? And once we get really good clarification on where that is going and going forward, and know your customer issues, I think that that's going to open the door for institutions to feel comfortable with that as a long-term investment, not just a short-term risk on play, but a long-term investment. So I would love to see some clarification in DC about it. I know that there's some Bitcoiners who they want no regulation around it, but I think it's important to get that buy-in from the very, very, very large institutions. And remember, these institutions they're managing pensions for millions and millions of people. So this isn't just these big institutions are going to make a bunch of money for themselves. They're making money for the people that they're managing the money for, and so I think it's really important. That's the key. And I hope that we get some direction on legislation. Now, the thing is, we're in a mid-cycle election here, right, in America. So we're in the 2-year election between president elections, and that's important. It's important for both parties to understand what is at stake. And I don't think that either one of them want to alienate what is a growing constituent within America. And they both know it. Now, funny enough, the Republicans are the ones who are embracing the freedom, when I grew up, there was the Democrats who were, peace, love, no government. But now the Democrats have flipped and they want big government. And it's kind of crazy. But I do see a lot of Republicans coming out that are in favor of Bitcoin in particular, and they understand that it's important. So,
wow. What was that? I had a question. Something just came into my mind there. So my PT, the guy who does my PT, is called Sam, and he's an ex-hockey player. So he played hockey here in the UK, and I was chatting to him the other day, and I said, "Have you ever seen the movie Slapshot?" And he's like, "Yeah, it's one of my favorite movies, man." And we literally fell about laughing for about 2 minutes talking about Slapshot.
That's a great one.
It's so good. Have you seen Slapshot, Jordan?
No, I knew you were going to ask me that. When was it filmed?
I don't know, 1970s.
70s. Yeah, it's a classic. It's a classic. I was actually, one of the Hanson brothers was my coach one year. Because he was in the Bruins. He was in the Boston Bruins affiliated semi-pro club, and he was one of the coaches there. So he coached me one summer. It was pretty funny.
That is incredible.
And they did. Yeah, it was fun.
Jordan, if you get a chance to watch that movie, you will gut yourself in laughter.
Okay.
Oh yeah. Classic. Absolute classic.
Right.
As an aside.
Yeah. Right. Let's forget about that for now. Let's move the conversation on to, I want to talk about the newsletter and the threads you've been doing, because that's how I got to know you on Twitter. Is
Awesome.
I read one of your newsletters. The one was credit default swaps.
Yeah.
And the way that you wrote it made it so simple. And I think with this podcast, our aim is to simplify cryptocurrency for people coming in. Like we say, taking the cryptic out of crypto. And it's so important for people to understand. And I think it's really important for people to understand the old system as well. And maybe what a credit default swap is, because a lot of people don't know that this was a big factor in the 2008 crash. And the way that you broke it down was amazing. I've been reading it every week since.
Thank you.
What drove you to doing this and making this newsletter and simplifying everything?
Well, thank you. First of all, I truly appreciate that, because that is exactly what my aim is. Like I said before, I know that my wife, she used to say that when she was a kid, she knew that there was something bigger. There was something, with these huge financial firms, and there was something there that was so important that she just couldn't, like, they couldn't get. And there was, just because he was just out of reach. And there's this knowledge that people don't have. And I think that's unfortunate. I'm just a kid from upstate New York, and I clawed my way in, and I've learned this whole world, and my aim is to demystify it, and one of the things that I am really good at, that I'm thankful for, that one of my gifts is simplifying complicated concepts for people, and delivering it to them in a way that they can understand, meeting them where they are. And there's so many people in our community, particularly on Bitcoin Twitter, who are gaining all this knowledge about Bitcoin and monetary policy and all, but there are these catchphrases and these keywords and hot topics that people are throwing around, and they're acronyms and terms that they just blow right past. And so people like, and Lynn Alden, and I don't know, there's Luke Groman, like they have these incredibly intelligent concepts, and they burrow deep into these issues, but some of that is not accessible to your average person. And invariably, the first question on those threads is, please explain this in English.
Yeah.
And it's not their fault. It's not Luke's or Lynn's or anybody's fault. They're just so smart, and they have so much knowledge that we all forget how we can just blow past these terms or these concepts without even thinking, well, of course they would get that. No, of course they're not going to get that. They haven't lived it for 25 years. So
true. So true.
So what I'd like to do is just open the door and simplify it. And I've seen some people that from my old world sign up for the newsletter, and I kind of chuckle to myself, because I'm like, you're not going to learn anything from this, but okay, if you want to check it out, that's great, because it's really simplified down to the basics for everyday people. And that's my goal. It's not written for institutional investors. It's written for people people like you guys who haven't been in that world forever, but would love to know, like, well, how does this really work? But simplify it for me so I can get a grasp on it, because you guys talk in these terms that they're not that difficult to understand, the concepts. But if you're talking in acronyms and terms all the time, and you put those concepts together, then it gets to the point where it's just not accessible. So that's why.
That's awesome. And I've got one other question that I picked up from that.
Yeah.
Is that all of this is really complicated. The financial world is really complicated. Do you think, I might just be totally spitballing, going off topic here, do you think it's on purpose that we don't know all of this of financial jargon, essentially. Is that on purpose that we're not taught that? I know this is getting a bit.
Yeah, that's a little bit. Okay, so I mean, the evolution of the educational system is a troubling and complicated concept in and of itself. But the answer is, I don't know. I think it's criminal that we don't teach finance and investing and understanding of it in our schools. I tried to do it with my kids all the time. We around the dinner table, we talk about these concepts all the time, just so they get a grasp of it. But is it obscured for your average person? Well, I think some of these people, admittedly, it makes them feel big and smart to throw around these terms that some people may not understand. It makes them feel like, oh, I'm smarter than you are. And of course, that's idiotic, but it's the reality. And so if they keep you just a little bit dumb, then they can do what they want. I don't think that it's a conspiracy or it's widespread, like it's collusion that people are trying to keep the people dumb. I just think it's just control. If I have information, everybody understands that information is power, and power is money. And so if I have the information and you don't have it, it makes me more powerful. And maybe it's because I'm a little bit older now. Maybe it's because I've seen all of the jerks that I've had the opportunity to work with or on the other side of in Wall Street all these years. But and they're not all jerks. Believe me, I have some dear friends, some awesome lifelong friends from that community. But maybe it's just that I'm a little bit I'm aware of that, and I just don't care anymore. That's not my mission anymore. My mission is to help people understand this space, help people understand Bitcoin, help people understand how it can fit into their long-term investment and life benefit. And that's why I'm doing that.
That was an awesome answer.
So one guy who does have a mission is President Bukele in El Salvador. And what is going on there? I mean, Jordan and I were chatting beforehand about is it Mexico's second or third richest billionaires just arrived?
Yeah, and then he's got CZ from Binance is there. He's obviously got Max and Stacy. I'm very jealous. I want to be there.
What's your thoughts? What's your thoughts on that, James? But we're watching this play out, and some people will be pejorative and say, "Oh, okay, that's just a tin pot load of nonsense." But other people will be looking at it thinking this could be some significant experiment for the future.
Well, I think it's super significant, and there are a couple of reasons for it. But really, when it comes down to is that he's a lot younger than our officials here. One of the problems we have here is that our political system is overrun with very old boomers, and they are so out of touch with the reality of what's going on in America. They say things like that are just so ludicrous, like inflation is really hitting people who make less than $300,000 a year.
Oh my God!
What?
I can't believe that.
What? How tone deaf are you? Like, how disconnected from reality are you? So that's one thing, is that he's super young. He is and wants to be a visionary. The Central and South America they're stuck in this spot of being beholden to America and the United States and the US dollar. And he sees a way that he can kind of separate from that a little bit, and he can tip the power into maybe not his favor, but a little bit less of the favor of the behemoth of the United States. And if he can do that, well, it benefits his citizens, right? So I think that's all he's trying to do. And there's absolutely nothing sinister about it. The thing that is ludicrous is the letter that Congress wrote to him the other day. I mean, come on, you can see that the United States They understand. They're not dumb, you know. Um, you know, they understand that this is a very important development in that area of the world, and it scares them a little bit. So, you know, so be it. But the funny thing is, the United States could absolutely write history right now. We have enough power, enough influence in the world that we could be number one in Bitcoin mining. We could use Bitcoin as a reserve asset. It doesn't have to be the reserve currency. It could be a reserve asset, and we could really control that narrative going forward. The question is, will we?
Yeah.
I don't know. Remains to be seen. I think that we actually will. I think that we're going to wind up with the US dollar and another reserve currency, probably the Chinese yuan, that is lumped in with the ruble. But I think that you're going to have somewhat of a milkshake of the dollar that other currencies are going to kind of fold into, not in the next year or two, not in the next 5 or 10 years, but a ways out, because these things take a lot longer than people realize.
Yeah.
But I think eventually we get to the point where we have the US dollar and big US dollars as a main global reserve currency, and Bitcoin as a global reserve asset. And that's kind of the direction we're going.
Yeah.
So,
and do you think that other countries throughout the world are looking at El Salvador with a view to we might jump on that?
sure. I don't know who will be next, but there will definitely be a few. There will definitely be a few. I would guarantee that Mexico's taking a peek at it. I don't know for sure, but if I had to guess and if I had to bet on it, I would bet on it.
Yeah, it feels like it anyway. There's a lot more chat of it here. And there's a senator, Indira, she's pushing hard for Bitcoin. And then obviously we've got this billionaire, I'm not sure of his name. Very big on Bitcoin. But
has Carlos Slim said anything about it? I haven't seen anything from him on it.
I haven't seen anything.
That would be a big deal. So, but we'll see. We'll see.
Yeah, but hopefully Scotland's in that list.
Yeah.
And obviously you're living in I was going to call it Sin City, but it's no. So you're living in Las Vegas. I mean, talking about casinos, and is there much buzz around your neighbors, your buddies, your people if you go to the coffee shop or the golf course, whatever it is, does Bitcoin or crypto come up, or is it still just for people like us three?
Well, I don't know. I've orange pilled or tried to orange pill pretty much everybody around me. So maybe that I'm not a good temperature gauge on that. I have heard, every once in a while I'm walking to the supermarket or something, walking through the supermarket, and I hear somebody on their phone checking the price of Bitcoin or something. So, but yeah, I mean, there is definitely more chatter now than ever. But like you said before, we're in a bubble. The three of us are in this Bitcoin bubble that we are always talking about it with all of our friends and all of our colleagues, and we understand it. And so it's kind of like you're tuned to that frequency and you pick up on it. Maybe it was happening around me before that I didn't pick up on it, but now I'm picking up on it every single time it happens. So it's hard to really tell. So, yeah.
I think also what's really interesting is, so we've got people like yourself, James, you've got Greg Foss, Lawrence Lepard, Lynn Alden, you've got some amazing, as you say, informed, clever talent coming in with macroeconomic perspectives from the traditional world and laying out fantastic threads. You just retweeted or quote tweeted Lynn Alden. And I read her thread and I was like, wow. And these people they're adding real gravitas to the whole sort of case for Bitcoin, aren't they?
Oh, the funny thing is they come from that traditional world and understanding of exactly what's going on with our monetary policy and where the issues are. And you read that with Lynn's thread this morning. Greg comes from the world of debt and understanding exactly how the dynamics there. But the funny thing is, Greg and Luke and Lynn, I mean, they understand that Bitcoin could be the perfect solution to all of this.
Yeah.
And I say could be because we still haven't gotten enough buy-in from everybody, but I believe that we will. I just truly believe we will. I think that the force is now, the network effect has taken, has really taken place already to the point where it's going to be unstoppable.
Yeah.
It's just a question of how quickly it happens.
Yeah. James, I'm conscious that you've got to get off, and we've taken that 50 minutes has just flown in there. Thank you so much. I mean, I'm sitting here going, I could just chat for another hour.
Well, I appreciate it, guys. I really do. It's been a fun chat. Yeah.
And Jordan, you're going to make sure and promote the newsletter, The Informist, aren't you?
Yeah, I think all our listeners should listen to it, and they will profit from this because it is just broken down in a way that they will understand. So I'll put a link down below in the show notes so anyone can access it.
Awesome. Thank you, guys. I appreciate it. Yeah.
Thanks very much, James. And listen, have a fabulous weekend in Las Vegas.
And to you both. Thank you.
Thank you.
Scotland. And definitely. And thank you. Thank you, guys.
Cheers. Bye.
All right.